traders, how are you? Vladimir here from Home Trader Club. In this video, I would like to present you 3 steps, simple, classical, powerful Forex trading strategy I use to trade trend changes conditions and the entry on the beginning of a new trend. Ready? So let's begin. So to present and explain this strategy, I will take as example a trade executed in Home Trader Club. Let's go to the members area, and inside here, the trading journal, let's find, here we go, the Euro New Zealand. Okay, so this is the original call with expectation. This is a trigger zone for us with expectation that as long as the price is inside this area, I want to see the price making the dive all the way to the downside. So I want to explain why did I make this call. Let's go to the chart, and here we are. So let's take a look what really happened with this instrument and why did I trade the way I did. So the first step of this strategy is a definition of a key trading level. It could be done on any of the higher time frames. Since I found this setup on the 4-hour chart, I want to see my key trading zone building up and completed on a daily or ideally even the weekly chart. Why? Because the higher time frames key rejection zones have much more significant value and impact on the price than any of the small time frames. So that's exactly what I will be looking to do. So step number 1, identify a key level. So if I go to the weekly chart, what I see here, and I want quickly to give you a basic explanation. Of course, if you want to dig much deeper and understand all the terms and the price action and how I implement all my multi-time frame synchronization trading strategy, you can enjoy all of that right here in the Home Trader Club under the education. You have completed courses here. Okay, of course, full section of webinars as well. So watch that. It's very much recommended. So going back to the weekly chart, the definition here, I want quickly to go on blank screen and explain that. That could be any classical trend line. It could be any classical resistances, or that could be the place of supply and demand after the trend flips and changes. Okay, so if this low is broken, this becomes as a supply. If this low is broken, this high becomes as a supply, and in a combination of the highs of an uptrend and highs of a downtrend, it creates for us a trading box. Okay, the reason is, if you think about it, why is that a supply? Because from the highs, we know that the sellers took the control. Sellers took control here and here. Sellers took control here and here. That's why we will want to pay attention to these levels. If we take a look on the weekly chart, here we are. In the uptrend, we have this high. In a downtrend that happened afterwards, we have this high. Now, this becomes a key trading level. As simple as that. Besides that, the psychological level 1.8 is awaiting us there. Also, take a look what happens here. Classical conditions that I love. We got 3 waves to the upside with a bearish divergence on the histogram. While the market was making higher highs, the indicator was making lower highs, flipping from the positive to negative to lower positive. RSI made as well a bearish divergence. Classical conditions, and if I go to the daily chart to find a verification for my view, I can see that at the end of these 2 big waves, the market also entered the bearish divergence condition. And we had a beautiful condition here, higher highs on the chart versus lower highs on the MACD moving averages, as well as the RSI. Say no more, it's time to look for a bearish reversal. And this is exactly the trigger area, or how I love to trigger my reversals. So one of the classical conditions of reversals is the break. If you think about it, uptrend is a sequence of highs and lows in the same direction. When it is broken and it flips and makes lower highs, this is a potential flip of a trend, which says sell the rallies. Of course, with the combination of the higher time frame read. And we just saw that the higher time frame was screaming rejection and key level. Besides that, what I want to see is the most recent trend line being broken. So take a look what happens here. Sequence of highs and lows in the same direction. And then the break and the lower lows. Lower lows on the chart, lower lows on the indicator. Can't get better? It can get better. The most recent trend line of this rally was broken at the same time when the lows were created. This is an absolutely magical conditions with super high odds as the in your favor as a classical probability trade. So what we want is the broken support becomes a resistance and previously high becomes supply. That, oops, let me just redraw that a little bit. So what we want is this zone to hold. As long as this area holds, any pullback towards this area is your opportunity to go and join the sell. And this is exactly the execution we did here in our Home Trader Club call. The first target zone, as we had, is the previous significant low next to 38 daily Fibonacci with a daily significant volume profile zone. Okay, so if we go here, this is the target zone right here. This is the area next to the daily chart. Okay, the previously swing low down to the daily chart. So this area here, it's where we are heading as a first target zone. Next target zone would be basically open until the 4-hour will start to show some signs against us in the daily chart as well. If we go to the daily chart, take a look. So this was the first low, right? The next key low is here. And it happens to be right on this massive volume zone on a daily, weekly, and monthly chart. Absolutely golden zone. So if the sellers continue and hold the control, very high probability that this area would eventually be retested. So this is the 3 steps, simple, powerful, classical trading strategy I love to implement, not just in Forex, on any financial market I work with, in a multi-time frame synchronization and combination. It starts with key level on a higher time frame, and the definition of the higher time frame, I took here a weekly chart because I found a setup on the 4-hour chart. But if I would find a setup on the 1-hour chart, then for me the higher time frame will be 4-hour or daily. If I find the setup on the 15 minutes chart, for example, then my higher time frame will be 1 hour or 4 hours for the key levels. Then on one lower time frame, I would want to see verification, as I just showed you on a daily chart, and the 4-hour chart gives that classical trigger, the flip of the trend, the break of the trend line, and that's your probability. Make sure the risk reward works in your favor and ride the opportunity. Statistically speaking, this is absolutely beast, and this strategy exactly helps me to trade for living for over a decade with over than 70% accuracy rate in my trades. This technique exactly. Okay, so I hope I managed to explain the logic behind it. If you want to take it steps further and learn how to deal with that in a real time, how to implement all these multi-time frame synchronization thing, I invite you to join us in Home Trader Club. So join us with the link below this video in the description, and you get your access to our full trading course, real-time trading education, real-time trading opportunities, our community strategies, comprehensive media zone, and so much more. Follow us with the link below this video. Also, I would like to take the time and to ask your support. If you find value in this video, please make sure you hit the like button. few words in the comment section would be a very much help, and it will be a great help from you. This is how YouTube algorithm works. All these little likes and comments help a lot. So thanks a lot in advance. Of course, feel free to share it with the community, as this is open to the community, and I hope other traders will find value in that and help in their trading. Thanks for your time watching this video. I wish you and yours all the very best. I'll see you soon with more. Bye for now.